Nischal Maheshwari, Head Institutional Equities at Edelweiss Securities. Nischal, the debate on everyone's mind is what do you do with Axis and ICICI Bank? Is it at the trough of bad news? Do you start buying? Because now it seems, at least with one bank, it's clear now that there are going to be changes at the top. So it seems that that big transition, the last pain, has finally begun moving.
I agree with you. Basically, I think it's the bottom of the problems. Basically, if you really look at it, yes, there has been an issue which is upfront, but I think the market is ignoring quite a few positives on the ICICI Bank. It is one of the largest franchises, basically, which has been around. It has got liability franchise, one of the largest liability franchises with a CASA of more than 40%. So I think these are things basically which cannot be ignored, and the valuations is very, very mouth-watering. It's around 0.8 times core book value. So I think these are things, these are the times basically where long-term investors should step in. These kind of events basically only help you in getting into these kind of stocks, and that too in quantity. So I think that's a good time actually to go out and buy this stock, start acquiring a bit of it, and if there is more bad news, basically just keep on accumulating.
Nischal, you know, when we started the year, the general view was go for corporate banks. Indian economy was on a mend. Corporate banks will do much better than what retail banks would do. But frankly, I mean, in India, if you really have bet on an HDFC Bank or a Kotak Mahindra Bank or IndusInd Bank without, thinking aloud, you've really made money. So do you think that trend will continue, whereas corporate banks will give you these periodic, pops, but retail banking sector is where your money should be parked?
I think, Nikunj, that's been a trade for the last 2 or 3 years, and I think that trade has played out very well. Now what we are looking at is, if I gather from what my research team has been telling me on the ground, I think there has been some amount of recovery. I was meeting a few companies last week, especially on the capex side, and they have their order books full. And primarily this time the capex is being driven by the government. But I think if I put all these together, basically I'm seeing that the second half of FY19 you are going to see strong recovery coming into the economy. And that is what I think at the beginning of the year market was factoring in. Yes, I agree with you, there has been a few cases which have hit the headlines basically, but does it really impact the numbers? Doesn't impact the numbers as far as the earnings for the private sector corporate banks is concerned. Public sector corporate banks, yes, I agree with you, there is some more downside basically, but I think for the private sector corporate banks, I do not see there has been a significant change in numbers after all what all events have happened. And I see that this is a good chance for basically acquiring these banks.
Nischal, news just coming in, and we need to keep it with banks because that's where it seems like we are seeing ample amount of news flow. Yes Bank is saying that in a board meet on 26th April, they're going to be considering raising funds via QIP, preferential issue, private placement, and reappointing their CEO, Mr. Rana Kapoor. Wasn't it soon or in recent history that they raised money and which caused dilution, and there was all that drama around their fundraising plans? The only question that Nikunj, Aisha and I were just discussing right now is, what are their plans with regards to this fundraising exercise?
So, to be frank, I have to go into the details, but I think that may be an enabling resolution given that they have raised money last year only. And as you know, basically the raw material for all these banks is capital, obviously. They may be looking, but I think fundraising should be some time off because they raised a large amount of money last year only.
Okay, so do you think that in the upcoming earnings season, you will closely be monitoring what the banks say rather than what they do with regards to handling the bad loan situation into FY19? Pretty much be more committed to resolving this mess, whether it's PSUs or privates?
So I think I have to divide the private sector, the private and PSU banks on the corporate side into two buckets. I think as far as private sector banks is concerned, I would really look at it what the managements are saying, because we believe that the recoveries are going to be strong, and the provisioning which they have made earlier in the FY19, that should start getting reversed, given that the NCLT, some of these cases have really done much better than what the market was expecting. Now, in case of PSU banks, I still believe that there is some more way to go, basically, given that the SDR, S4A, all of those things have to be made provisions for. And there the provisions have been made anywhere between 30 to 40%. So I believe there is another 10 to 15% more provisions which needs to be made once these are recognized as GNPAs. So I think PSU banks, you have to still look at the numbers. In case of private sector banks, I think you have to focus on what the management says.
Mr. can't help but talk about earnings as well, because soon we're going to be officially kickstarting earnings with Infosys, and especially in the light of what Wipro's commentary has been, the fact that one of their key clients, which we think it's Aircel from within the telecom sector, which has filed for insolvency. While Wipro may be a very standalone, very specific case story, what is it that we can expect largely from the rest of the IT pack? And given that IT has really been the favorite hiding sector year to date?
I think still this quarter numbers wouldn't be as great because I think what we have to keep on looking out is for the commentary. And the commentary should be better. Basically, we have seen last quarter where most of these corporates came across and said that there has been demand which is coming back, and I continue to believe that commentary will continue to be there in the current quarter also. As far as numbers are concerned, I think should be around anywhere from around 2 to 3% kind of a dollar growth is what most of these guys are going to do. But I think the next year's guidance is going to become very important in the current quarter, and that is what I think most of the people will focus upon.
NBFCs are richly priced, and yet they are the ones where outperformance is real. Chola is almost at a record high. Bajaj Finance not far away from a record high. HFCs have also managed to bounce back. So do you think that price and time-wise correction in HFCs is over? HFCs and NBFCs rather?
Yeah, I think, Nikunj, we have been always positive on NBFCs. Basically, there are two things which are in favor of NBFCs. One is basically that they continue to grow at a much faster pace than the rest of the market. So most of them will do a 20% plus kind of a growth. Secondly, the space is continuously being vacated by the PSU banks, and that is what is actually allowing these NBFCs to grow pretty well. And recent reversal where RBI has come in basically and give a moderate outlook on inflation, and thereby the 10-year yields reversing, I think that's also a positive for the whole sector. So you have start seeing NBFCs once again start doing well. They had corrected in terms of valuation, so some frothiness has gone away as far as valuation is concerned. So I think it's a good bet. Selectively, you should go out and look at some of these NBFCs.
What would be your ideal portfolio allocation of, you look of your model portfolio for this year and next year? I'm assuming that we will see volatility in next 12-18 months because of election, macro concerns, global fear of trade war. What kind of positioning your portfolio should have? Defensive, aggressive, tilted towards cyclicals, hiding in IT?
So I think you have to manage this year. I think it will be much more bottoms up basically, because you are not going to be looking at a very, very strong growth on the top line. So economy wise, basically, yes, it's going to get moderated out, though earnings are going to come back in FY19. Now we are all starting with a 20% number, but given that what kind of track record Nifty has, I think 12 to 15% kind of a growth is expected. So it has to be a more bottoms-up approach, but I would agree with you basically that a large portion should be in the defensives, whether it is IT, whether it is FMCG, which will continue to do well, or private sector banks. I think these are sort of defensive plays in the market today, and one should be looking at it. As far as growth is concerned, I think NBFC is one space where you should be overweight. And again, you should be looking at commodities, especially the metal pack.
So good chatting with you. Thank you so much for taking the time out and